Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello, everyone, and welcome to Accredited Investor Markets Radio. I am your host, Christopher Cahill. Later on, I'll be speaking with the wonderful, wise, and learned Swati Chaturvedi, and we will be talking about investments in deep technology. Before that, a few reflections on startups that have been aroused by recent relevant writings. First, one often hears, or at least I often hear, three words, and I use words with quotation marks around them because they are really brands, spoken together. Uber, Lyft, Airbnb. It's like a troika. It's almost as though they're three divisions of one company, but what they are three distinct and extremely successful and very recent startups. They have a few other things in common. Each of these three startups enlists large numbers of people, a great well of latent people power. And how does it turn that power into profit? Via smartphone technology and technology that goes into smartphones, which, by managing information the way they do, create efficiencies for basic life functions, such as where one can stay for a few days, or how one can get there or get home on a given night. In the Wall Street Journal of March 9, 2015, Christopher Mims, whom we have spoken of before, published an article called "At Startups, People Are the New Infrastructure." And I guess new infrastructure is a shorthand way, a useful shorthand way of referring to this combination of people power and smartphone type technology. There are people out there who want to drive other people. There are people out there who want to provide accommodation for other people. And there are people, obviously, who need these things. The technology puts them all in sync with one another. Well, Mr. Mims's article talks about another startup, which is inspired by the three-headed monster of Uber, Lyft, and Airbnb. The startup is named Rodi, and in a gesture of great unconventionality, Rodi is spelled the way Rodi is spelled, R-O-A-D-I-E. And Rodi's goal is to disrupt, and that's what every good young business wants to do, disrupt, is to disrupt FedEx. FedEx, of course, has 1 billion planes, and can take anything anywhere. But let us say that Mr. A is planning to drive to Fresno in his van from Walla Walla, Washington. Now let's say that Ms. B needs to have a bicycle built for two taken from Walla Walla to, of all places, Fresno. Or maybe it's an aquarium or some large plants or a perpetual motion machine, perhaps, or some Rube Goldberg device. Well, anyway, something that doesn't really fit easily into a FedEx pouch, bag, or box. Rodi will connect Mr. A and Ms. B and get that thing, whatever it is, from Walla Walla to Fresno. Mims's point is that through the new infrastructure, human beings can do things human beings can do best. The new technology organizes desire and capacity for maximum efficiency. This brings to mind something we talked about a few weeks ago. Those of you who are faithful listeners will recall it. New listeners will hear it for the first time, at least from me. Another derivation of the Lyft, Uber, Airbnb stories, and this one is called Cargomatic. Cargomatic uses an Uber-style app to get containers, that's containers from large ocean-going ships, more quickly off the port and onto the truck and toward the destination. As you will recall, there was a large West Coast port labor action, which has concluded recently. And necessity being the mother of invention, I think I might have used that phrase back when I first spoke of this. The portmasters tried to marry trucks with containers as quickly as possible. Now you can imagine, if you have a truck from XYZ company that needs the container of XYZ that was delivered from China to be put onto the truck and then itself trucked to the customer, well, what's going to happen if the XYZ container is deep among piles and piles of containers on a very large dock? It may be quite distant from the truck. Extracting it, bringing it to the truck while the truck waits is not efficient. There must be a way, a better way. Well, this app, provided that you have truckers and dock masters all working together, can bring the truck that's first in line together with the container that's nearest to it. And provided that all the terms are agreeable to the both of them, you have a container placed on a truck and a contract electronically concluded between truck and container company, or whichever company has the authority to do so on behalf of the container. And the truck speeds off to wherever that container is going and whatever is in it. It sounded like an awesome way to reorganize how docks work, and ports will benefit from this efficiency, as will truckers and as will customers. Okay, so Lyft, Uber, Airbnb is a bubble brewing. Excessive enthusiasm brews bubbles. And we have an article on our website, AIMkts.com, written by the AIMkts editors, which discusses whether or not a bubble may be brewing, or what to look for is if one is worried about a bubble brewing amongst such startups. The article isn't just a group of thoughts by the editors. It links to several other articles on this theme. So when you're talking about a Lyft, an Uber, and an Airbnb, you're talking about companies with very high valuations, and maybe the temptation is for these derivative companies like Cargomatic or Roadie and others like them to assign to them a valuation that's as high. After all, they're all using the new infrastructure, and it's gone pretty well for Lyft, Uber, and Airbnb. The article on AIMkts.com, which by the way is entitled, "Those who do not know history may be doomed to repeat it. The bubble may burst again." It's dated October 6, 2014. This article, in its very title, calls to mind George Santayana's injunction that those who ignore the lessons of history are doomed to repeat them, a great early 20th century historian who himself would have admitted that he is but a Cassandra, to use a term from the Iliad for somebody who gives a warning. So the article links to three or four other articles that give a warning. And the warning in these articles is focused on the way cash is used in these young companies. And I can tell you that poor cash use, in my experience as an attorney, portends business failure. Well, similarly, though a valuation is high, though even revenues are high, poor cash use in these startups may portend something less than a great outcome. Again, the article is offered to give perspective, to dampen excessive enthusiasm for sexy startups, and that's what makes startups sexy. They arouse excessive enthusiasm. Well, we turn finally, to bring us back to enthusiasm, to an article on successful venture capitalists. It's entitled, "As $1 billion Startup Exits Multiply, These 6 VC Unicorn Wranglers Stand Out." And what we're talking about are venture capital firms that have managed to make the right bets. The article appears in the Silicon Valley Business Journal, February 3, 2015, written by Cromwell Schubarth. And if I ever get reincarnated, I hope that the name Cromwell Schubarth is available to me. It's a great name. Mr. Schubarth discusses how, from 2003 to 2013, there were 104 new firms that had $1 billion exits. And if you shift that time range to from 2004 to 2014, the number goes from 104 to 161. There's an acceleration, therefore, of firms making a $1 billion exit. He also argues that successful VC firms are getting in earlier, and the data bears out that as we get closer to the present day, more VC firms are getting in at the Series A stage or earlier with these startups that exit for $1 billion or more. It would appear that the VC firms are getting better at it. At least that's the inference one might raise from reading the article. Well, let's just talk about who they are and how many they got and who their startups are. So the VC firm with the most $1 billion exits in the recent period, Sequoia Capital with 12, and those exits were Instagram, WhatsApp, Tumblr, ServiceNow, Nimble Storage, Meraki, Palo Alto Networks, Barracuda Networks, YouTube, FireEye, Kayak, and LinkedIn. Second was Kleiner Perkins Caulfield and Byers with 11, and then there are 4 other VC firms that had 9 each, and those are New Enterprise Associates, Benchmark Capital, Accel Partners, and Greylock Partners. So what is their secret sauce? Well, they're not going to tell you. Or maybe you can find something out by researching them. I would be interested to see how these successful VC unicorn wranglers regard the factors of valuation, revenue, and use of cash. Well, let's get to the interview. Our guest today is Swati Chaturvedi, co-founder and chief executive officer of PropelX. Before starting PropelX, Swati worked in management consulting and investing, including at Exigen Capital, on information technology, telecom, travel, and BPO deals. Before that, Swati sourced and evaluated deals in the industrial automation sector with Siemens Venture Capital. Swati is also the co-founder and coordinator of the MIT Alumni Angel Investors Group. Swati has an MBA from the Sloan School of Management, and here's where I get a little intimidated, a Master of Science from MIT in the Technology and Policy program, and a Master of Science from University of California, Berkeley in Civil Engineering. Swati also holds a bachelor's degree in architecture from the Indian Institute of Technology. She is a fan of all things science fiction and would probably agree that analysis and imagination are both important facets of investing acumen. And I guess the first thing, Swati, to ask is whether you do agree.
Well, thank you, Chris, for the wonderful introduction. Absolutely agree that analysis and imagination are both important. And in general, investors that invest in early-stage startups have to be optimistic by their nature.
Well, thank you, Swati. Let's just spend a moment on the name of your new venture, PropelX. It's all one word, but there's a parentheses around the X, so it's Propel, parentheses, X, close parentheses. Why that name?
Thank you, Chris. Yes, of course. So PropelX is an investment platform which focuses on investments in science and technology-oriented startups. We are a bunch of people who are passionate about science and technology, and our name reflects that a little bit. Propel is the function where our goal is to propel all startups through the funding and eventually to success. And X is the variable, where X would be every company that comes on our platform. So PropelX is the function, where Propel is the function and X is the argument.
A very active name.
Thank you.
Now, PropelX brings deep technology early-stage companies and investors together. Okay, what is deep technology?
That's a great question. So deep technology companies, as we define them, are companies that are founded on a scientific discovery or true technological innovation. And we are looking at specifically 4 different sectors in these areas. The first sector is life sciences, the second is energy and clean tech, the third is computer sciences, and the fourth is materials. And if you like, I can give you examples of companies in these areas.
That would be great.
Fantastic. So if you look at life sciences, one example would be the next generation of gene therapies that could help cure disorders and diseases by selectively expressing or suppressing specific genes. It could be new types of cancer therapies, new diagnostics, new prosthetics, smart prosthetics. If you look at energy, for example, there are companies out there that are developing ultra-capacitor-based energy storage that will allow you to charge your cell phones in 30 seconds or less. That was unheard of before. There are computing technologies under computer sciences that will enhance reliability in hosted environments. That's a big challenge right now, because of which many companies are not putting mission-critical data up in the cloud. We have, in fact, helped one such company in this area already. If we look at materials, there are carbon nanotube-based technologies that could increase computing speeds by orders of magnitude. So these are all deep technologies. In fact, they're all science and technology-based companies. And I do want to emphasize on companies, because we are not focused on science projects here. We are looking to help fund the next generation of technology companies that will form the basis of really enduring companies in the future.
Well, Swati, I'm glad to hear your specifics and the enthusiasm coming through your voice about the thrill of discovery and then the marketing of such discoveries. And when you market discoveries, of course, that means that the rest of the economy gets to benefit. The rest of the people in the country get to benefit.
Absolutely.
The world get to benefit from these things, because you often hear these days that technology has played itself out. It's the sort of thing I've been hearing much of my life. We can't do much more than we've done.
No, that's so not true. Absolutely. We don't agree with that at all.
And evidently you have the facts to back yourself up. Okay, you are dealing with enterprises. So you've talked about some enterprises. Who are the investors that you are looking to bring together with these young enterprises?
Yeah. So there's a number of different types of investors that have expressed an interest in the companies we are bringing forth. So number one, when we started out, the idea was, it's a take on crowdfunding. So the idea was to enable individuals who are interested in science and technology to be able to invest in these companies. So these individuals would be accredited investors across the globe, and these could be, senior executives in companies such as Applied Materials, Samsung, Intel, Pfizer, Medtronic, companies in these science and technology-based areas, and executives who understood these areas and are interested in this kind of deal flow. So that was our idea when we started. But we have certainly received interest from corporates as well as some institutional investors as well as international investors. So people are looking very much to invest in deep technology companies, what we call invest in technologies that matter. So those are our investors, yeah.
Well, okay. I'm going to quote you now, and that's always dangerous to be quoted. But you were quoted in an article with regard to this, the overall purpose of PropelX. And you said, and I quote, "We need to encourage intellectual independence. We need to stop following celebrity investors and encourage independent thinking and due diligence." There's a whole lot going on there. But I guess my first question is, who are these celebrities, and what does it mean to be intellectually independent?
Yeah, so one of the key problems, or one of the key concerns that I find in this emerging area of investing online in early stage opportunities is this idea that people rely on other people's diligence. So for example, you can go to a platform and you see that a well-known investor has invested in a certain company. So, hey, I'm going to take my $25,000, I'm also going to put it in that money. Or someone would say, I'm going to take my $5,000 and I'm going to put it in the same company. So you're, in effect, just relying on someone else's diligence without really understanding the details of the company yourself. And that is very bothersome to me, because there have been instances throughout history, there have been instances that have happened where people have relied on other people and they've gotten into trouble. And one recent example was the area of Madoff, right? Who was an authority, and people just relied on his authority, even though there was clear evidence that the numbers couldn't be real. In spite of that, they went ahead and relied on his authority, and other people, everyone's investing, let me also invest. That is what social investing was. So what we are saying is, let us not get carried away by what other people are doing. Think for yourself. be intellectually independent, be savvy, be thoughtful. So that is what we want to promote. And the companies that we bring forth are complex enough that they need some diligence. So please don't just rely on someone else's diligence and say, okay, XYZ is investing, so I'm going to go ahead and invest myself. So that was my response to your question. Who are these celebrities? These are celebrity investors. There are some very famous investors out there.
Well, if I may, they're celebrity investors. Obviously, they're putting their money where their mouth is. So that's something. But whenever I look at the business pages, and I look at them often, I see predictions about investment directions for various sectors of the economy and so on. Yeah. What I never see is an account for how well this predictor's predictions have gone in the past. I mean, on the football sports pages these days, very often you'll find somebody say that he or she went 10-6 last week, or 5-11. So you have some idea, but the celebrities, you just don't know. They never talk about how their prognostications have gone in the past. If anything, that must underscore your point about acquiring some independent bases of judgment.
Absolutely, absolutely. And what is more, especially in finance, past performance is not a predictor of the future. So absolutely, even if they did tell us about the past performance, that's no indication of the future. Every company must be judged on its own merit.
Yeah. I took the liberty of sending you a Wall Street Journal article, which I thought had to do with deep technology. And it had to do with robotic legs. It was really about exoskeleton. So it's not like replacing legs. It's legs that don't function well on a human being. And there's an exoskeleton device that allows that person to walk. By the way, this article was in the Wall Street Journal on November 12, 2014. This is deep technology, isn't it?
Yes, absolutely. There's not a doubt about that. Yeah.
So the article went on to say that there was a great leap forward in the technology with regard to the function of the exoskeleton, which had to do with powerful motors running off lithium batteries, the motors themselves being very small. Yeah. So that's deep technology, too, that sort of afforded the opportunity for the exoskeleton technology to move on.
Absolutely. I mean, each of these technologies, builds upon the other. And that's why we have a category called Other, which is meant for interdisciplinary technologies. But please carry on. Yes.
So let's say one's at the stage where something like a small, powerful motors are developed, and this is something that's come to the attention of PropelX. It's a small startup that's creating something with so many potential applications. Does your analysis venture educated guesses about such applications?
So, no, we don't venture guesses as to other potential applications. That's not our role. I mean, we have to look at the company that currently exists, right? And what is its financial potential based on what we have today. So we don't, I just want to reemphasize, we don't want to fund science projects or science fantasy out here. Every technology that comes along typically goes on to have many more applications. But what we want to help people do is invest in the technology today, what exists today. So we don't venture educated guesses. The companies that are on our platform, they're usually close to product ready and entering commercialization. In other words, most of the R&D is done. They might be looking for some funding to complete the R&D. Very often companies on our platform have already received funding from sources like NSF and NIH, which is non-dilutive grants, to actually perform the R&D and bring the product to almost completion, which is now ready to be commercialized. It still may, in some cases, especially in life sciences, it may need to go through regulatory analysis and so on, but they're close to product ready. So we are not venturing educated guesses into other applications, but we're just taking what is there today and helping them raise financing.
Well, okay, but I'll refer to that article one last time, because it was a short piece, but very rich in its way. The exoskeleton's inventor, the inventor of the prototype, talked in the article, or was quoted in the article, regarding his bad experience with a company. He licensed his technology to a company that was supposed to develop and market the device, but did not do so adequately. and the hope is that the new licensee will do a better job. So, does PropelX evaluate the startup's abilities with respect to development and marketing?
Yeah, so right now we do promote, so I just want to go back to this idea of diligence. When we started off, we wrote detailed diligence reports, which were available for download on our website. So any investors that came, they could download the diligence reports, they could attend the investor calls, ask questions, and so on. Within those diligence reports, we absolutely ask the question of the startup: who is your potential partner? How far along is the conversation? We might go and actually interview the potential partner. That was all part of the diligence. I do want to say here that we are now moving on to a more scalable method of performing diligence, which is very akin to how you would perform diligence in an angel group setting, where you kind of, all the investors get offline together and they ask questions, and they have key diligence questions for management, for customers, suppliers, distributors, what have you. And so those questions go out and you get the responses and you make your own you can talk to experts and so on. So that is the kind of diligence mechanism we are enabling, and this would be online. So now, by contrast to earlier when we actually interviewed, for example, the partners of such companies, now we are not going to be doing that, but we enable individuals to do that directly, and we will absolutely be getting contact details of potential partners from the startups, and angel investors on the platform will be able to ask those questions. So to answer your question, sorry, this was a long way of answering your question, but to answer your question directly, we did used to do all that diligence, and now we're moving to a more scalable method where we can do large amounts of diligence, scalably, more efficiently, and investors can ask those questions themselves.
Perhaps reflecting the truth that a large or even just significant number of good minds often do a more complete job than even one brilliant mind.
Absolutely. Oh, I could not agree with you more. Absolutely.
And one thing we did not mention, which must emerge in these discussions or in these online inquiries, is the availability of potential partners or acquirers who might take on the task of developing and marketing the deep technology.
So I guess, is your question, are these potential partners available to our platform?
Well, I mean, it's just that this information gathering process must cause such opportunities to emerge.
Oh, absolutely.
Yes.
In fact, we have been approached by corporates, who want to understand, who want to participate in the new developments on the market. They want to invest more and more in earlier stage companies. So there are such people who absolutely exist. We have a whole offline network of these corporates, and we absolutely make introductions where we think it's appropriate. So there's no doubt about that. Many of the angel investors themselves, because they have backgrounds in science and technology, they are able to introduce these companies to relevant potential partners. Absolutely, yeah.
Well, and that sort of slides into my next question. Let us say that you're a bright-eyed and bushy-tailed startup, great idea. You have a handle on regulatory issues, and you believe you know how you're going to make money. And that startup wants to sign up with you to attract investors. Okay, but that startup's not too keen about competitors also signing up with you.
Yeah.
It might want exclusivity. One can imagine that anyway.
Yeah.
What's the approach of your company to that?
Yeah, at this point we don't have any kind of exclusivity. So, for example, if there are two energy storage devices, both kind of targeting the same kind of market, let's say the cell phone charging market, we would have them both. If we think the technology is viable, we have certain objective criteria which you need to meet, which is on our website. If you meet those criteria, you'd be on our website, provided your valuation and so on meet the criteria too. But yeah, so we don't have exclusivity on our side, and that is really to protect the investors. The investors need to see what all is there on the market that is targeting the same problem. How can this problem best be solved? That is how entire society is going to be benefited, because investors see, okay, here's the 5 different approaches of solving the same problem. We think that approaches A and B are most likely to succeed and will probably have the best bang for the buck. Well, then approaches A and B are going to be financed. So that's the benefit of having platforms like ours, where you can actually see the range of solutions to a problem. So it's in the best interest of investors and the world in general where capital is allocated most efficiently.
Oh, you seem to believe that it's not good or preferable to have a commissar deciding on one winner and...
No.
Okay. Well, that's good. I can't say I disagree with that. All right. So startups sign up. How do you get paid? How will you get paid? How's PropelX going to keep going?
Absolutely. So we are free right now, which is great. Great for startups, great for investors. We are free both ways. But in the future, we do have a plan to make money. We are not a charity. So in the long run, we are planning to have a combination model, which would be based partly on commissions and partly on subscriptions. So I don't want to get into numbers at this point, but yeah, that's the idea that, we are not going to continue to be free forever. So now is your chance to sign up. Yeah.
Well, now I'm going to ask you about being a fan of all things science fiction. Swati, can you identify something in science fiction that has become science fact to your delight as you've gone through your varied and very interesting career?
Oh, wow. Let's talk about robotic surgery, all right? So this just struck me. I'm sure most people have seen Star Wars and other various varieties. And there's this one scene in Star Wars where Darth Vader is actually being operated upon by a robot.
Imagine that.
Yeah, imagine that. But it exists, There are companies that are doing that. Intuitive Surgical was one of the first ones. They started with orthopedic surgery, robotics for orthopedic surgery. And there's been some successes, some failures. But it exists, it continues to improve, and we hope to be part of that, change. We hope to bring these technologies, which you've only seen in movies, to life. And I'm very excited about that.
Well, I guess who wouldn't be? I'm excited about that now. Thank you very much, Swati Chaturvedi, co-founder and chief executive officer of PropelX.
It's a pleasure, Chris. Thank you for having me.
This has been Accredited Investor Markets Radio. I am the host, Christopher Cahill, and Accredited Investor Markets Radio is produced by Stephanie Strait. Thank you all for listening, and let's do this again.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.